Welcome back to Candide Conversation, Wise Counsel. We have with us in studio managing partner from McCarthy Law, Kevin McCarthy, and we're visiting with Robert Nagle from the Nagle Law Group. And Robert, you focus, among other things, but we've been talking about real estate today, and
Yes.
and kind of some of the strategic ways to both benefit if you have to short sell or foreclose, if you've got a deficiency. Let me pick up with this. Talk to us a little bit about the short sell strategy, how it's best to kind of play out a short sell.
Sure. I mean, just backing up, when a client comes in to meet with me, short sale is not the only option. Letting the home just go to foreclosure is certainly a viable option for many homeowners. If you have a purchase money loan, if you do not have a home equity line affecting your property, foreclosure is just as viable an option as doing a short sale.
Okay.
And going back to what I was speaking about before the break, waiting until you don't have to make that decision. You have a purchase money loan, or you have two purchase money loans, a first and a second that were both used to purchase your home. You can wait until you get that notice of sale. That's going to be the
get going. That's going to be your get going notice.
That's right. That's going to be the moment where you need to decide: do I hire a realtor to short sell my home, or do I just let it go to foreclosure? And that's something we talk about. What are your needs post sale? What are you doing down the road? Do you need to short sell? Is it better for you to do that type of thing?
I kind of thought a short sale kind of put you more in the driver's seat, but maybe not.
Not really. I mean, either way, you're going to get $0 out of the house, and the only true difference at the end of the day is how long until you can get another home loan.
Got it.
Your credit score is going to recover pretty much at the same pace, whether you do a short sale or a foreclosure, especially if you're missing payments, and it's just something that there's no real advantage other than the sooner you're able to get another home loan sooner. So, and that's something to consider as well. Many clients believe that their credit is ruined, or it's going to take 7 years for their credit to recover, and that's just not the case. It's obviously if you start missing other payments, you're going to have some trouble. But if it's just the home loan, your credit cards aren't going to get cut off. You're still going to be able to get a car loan, and you just have a little delay on buying a new home, assuming you don't have the capital to put a good chunk down on the next home. I mean, if you have enough cash to buy a home, only cash, you're all set. If you can put 20 or 30% down, more of the
you're still financeable if you've got 20 to 30% down, even in the
you're probably going to have to live somewhere for an interim period. Okay. But you're not going to have to wait 2, 3, 4 years, even if you have a foreclosure, because the problem that we have right now and what led to this bubble is I'm putting zero down. Or actually, I'm almost going a negative. They're almost paying me money to buy the house, which runs contrary to how buying homes had been for decades. You put 20% down. If you don't put 20% down, it's 10%, and you get PMI. Everything worked really well under that scenario because there was a lot more equity in the homes.
Well, there's a little bit of a cushion there. Should things turn, which we hope they never do, but should they turn?
There's more equity to be lost before you go underwater.
Right.
And therefore, when things start turning around again, as they are now, you're still in that equity position.
Push away from the edge of the cliff a little bit.
That's right. For many homeowners, when they're underwater like this, they're renters.
Right.
And the first question, the threshold question is, if I move from this house, if I'm paying $2,000 a month and I can get a comparable home for $1,500 a month,
right?
Am I not better off just getting a reset on my credit, moving to the other home for a couple of years?
Well, and I guess you've really got to assess, take a good hard look at what your credit's worth, because if you're talking about a deficiency in your home, or you're upside down in your home a couple $100,000, which is not uncommon, I don't know. I mean, it really makes it hard to stay in the home, right? I mean, it's going to take so long for that to recover. The strategic short sale or foreclosure just might make more sense.
If you're concerned about your credit and it's going to take you 15, 20 years for your home to go above water again,
right.
Or you can, and thus you're keeping your credit good for all that time, or you can take a 2-year hit
right.
and start fresh and
right.
save all of that lost money that you're paying to whose benefit? Only the lenders. Every dollar of appreciation, every interest payment is going into the lender's pocket and not your own.
Why are people so fearful or so protective of their credit score? Have we just kind of been led to believe that it's more important than it is?
Well, we've definitely been led to believe that it's more important than it is. It's one of those things where we all may have a general idea what our credit score is, yet when you sit down with friends, you never go, "Hey, Bill, I just found out my credit score is a 780. What's yours?"
Right.
It's something we do not discuss with anyone else. So only you know what your score is. But we're all brought up with and I think it's a good moral value, to pay your debts. But what people don't understand is there are many circumstances where the other party that you borrowed from has agreed you don't have to pay them back. Lenders in Arizona are one example. Your cell phone carrier. You've signed a 2-year contract with that cell phone carrier. Yet as we watch football games on the weekend, there are Verizon ads, AT&T ads, T-Mobile ads.
Yeah.
What are they trying to get you to do? Break your contract and move to them. Yet no one accuses these cell carriers
right.
of trying to destroy the moral fiber of our country. It's completely acceptable to break your contract. Why? Because
there's an agreement.
There's an agreement that says, you've agreed to pay us for 2 years, but if you don't want to anymore, you pay us $300 and we call it a day.
Got it.
And that's what lenders in Arizona have done on that purchase money loan. You have to pay us back. Here's what it says. But there are 2 ways that you don't have to pay us back. One is you can pay off the loan anytime you want. That's when you sell your house or you refinance. You do not have to pay that loan back for 30 years. You can get rid of it anytime you want. And second, if you just stop paying for any reason, bad Chinese dinner last night, you just don't feel like making the payments anymore, the bank has agreed that they'll foreclose and take the house back.
Right.
And so while we have banks saying to people you have a moral obligation to pay your loan, I would say, but bank, you have an obligation to honor the contract you made with me.
Right.
Why are you making me feel bad?
So maybe the thing there is your family ought to come first, and then look out for the bank that got a huge stimulus check a few years ago.
That's right. We've already helped out the banks because
right.
we as a national community gave the banks some money.
Right.
And again, I just want to throw this out. If there's a moral obligation to pay, then there's a moral obligation for the bank to help us because it's due unto others.
Agreed. Let me get your take on this. What impact do you think that the election is going to have on real estate, if any? You think it's going to play into the real estate market at all, and what happens?
I think that as the economy continues to improve, housing prices traditionally rise and fall with the inflation rate. I think that interest rates are going to have to move up. I don't think they can keep them at these artificially low levels. I think people, in a way, want interest rates a little higher because they're tired of getting 0.001%
on their own money.
On their own money.
You're assuming anyone has any, but right.
So right now we're seeing some upward pressure on homes here in Arizona. We read about how Arizona home prices are really shooting up. But remember, these homes have first fallen over 50% down. And if houses then go 50% up, that doesn't get you back to zero. It's a bigger 50% down is a bigger number than 50% up. And so it's going to still take quite a while before you're back to even. And remember, to sell a house and profitably, you also have to pay that extra 7% for realtors and closing costs.
Yeah, that's a good point. You've got all those fees in there as well. So should you decide to sell, you've got to factor in that the commissions and the other fees to sell.
That's right. So again, if you have a $200,000 mortgage and you're at $100,000 to break even, just to break even, you need to get to $214,000.
Yeah. So would you say, is it a good time to sell, not a good time to sell, or kind of you've got to weigh those factors into it?
I believe it's a good time to sell for someone who's underwater who wants to employ the strategy that I discussed earlier, because you know that once you get that 91-day notice, you'll be able to short sell your home in that final 91 days while maximizing the amount of time you stay in the home for free. That makes it a good time. There's such demand for homes that are in good shape that you'll be able to sell your house in the basically the 12-week period that's there.
Right. Robert Nagle Law Group is with us. 602-595-3156. 602-595-3156. Robert, they could visit your website as well, naglelawgroup.com.
Correct.
naglelawgroup.com. Let me ask you about another thing in a couple of minutes before we go to the news. I hear the term loan modification. What is it? Is there a chance that I'm going to get one? How would I go about doing that?
Loan modification is literally what it sounds like, a modification of your loan by the lender. Typically, it's an adjustment in the payment schedule that you're making. So if I'm paying $2,000 a month, the hope is that based on my situation, the bank will agree that I only have to pay $1,000 or $1,200 a month back. It is atypical to have any type of principal reduction.
Okay.
If you have an
So what do they do in a loan mod then? Is it do they just
they may adjust the interest rate for a short period of time, let's say a 5-year period, where they'll drop the rate to 2%, 3%, 4%, and then slowly ratchet back up to the interest rate you're at now.
Okay.
Or they may take all of your payments you haven't made, add it onto the back end, extend the term of the loan from 30 years to 40 years.
So it's not a reset. It's when we talk about loan modifications, we're not getting a reset to current market values of the home. It's just a little bit of tweaking here and there to maybe get you to hang in there.
Right. There are two issues that most underwater homeowners are facing. One is they're underwater. But two, because they're underwater, they are unable to refinance. So they're paying on interest rates that are much higher than market rates right now, and there's nothing they can do to get down to that lower number. So what's happening is, even with the loan modifications, it may solve temporarily one problem, which is how much they pay, but it doesn't change the reality that they're still way underwater. And one day, since very few of us remain in our homes for a full 30 years, one day they are going to want to sell their home, and they'll still be underwater.
Is anyone getting these loan modifications as lousy as they really seem to be?
There definitely are people who get loan modifications, and they're very happy with them. Again, it's all a matter of, when I meet with a client,
it depends on the problem.
What the problem is and what their needs are.
Right.
Someone who just wants to rent for the rest of their lives, for example, and they get a loan modification that sets it at a number that's comparable or better than renting,
right,
is more than happy to be underwater for the rest of their lives.
Great advice from Robert Nagle, Nagle Law Group, 602-595-3156, 602-595-3156, or naglelawgroup.com. Robert, thanks so much for coming in. When we come back, Kevin McCarthy talk about credit card debt on Independent Talk, 1100 KFNX.